Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Bitcoin's ideological battle lines are being redrawn in code. Developer Leonidas has launched dog mode, a client that deliberately relaxes relay policies to support ordinals and runes. This move directly challenges the censorship concerns raised by BIP 110. It is a clear signal that the network's governance is fracturing under the weight of its own success. Meanwhile, the bond market is sending a far more urgent signal. Real Treasury inflation-protected securities yields have surged to historic highs. The 10-year real yield now sits at 2.31%, a level that demands serious attention from fixed-income portfolios heading into 2026. This spike is driven by persistent inflation, with the latest CPI reading stubbornly at 3.8%. Investors are no longer pricing in a soft landing. They are pricing in a long, hard stay at the top. On the geopolitical front, the European Union's trade unity is crumbling. Belgium has joined Spain and the Netherlands in banning the import of goods from Israeli settlements. This unilateral action highlights a deepening deadlock in Brussels. The EU cannot agree on a unified policy, leaving member states to act independently. The result is a fragmented trade landscape that complicates supply chains and diplomatic relations across the continent. In the equity markets, BlackRock continues to demonstrate its immense pricing power. The SPY ETF charges a fee of 0.0945% for S&P 500 exposure. Compare that to SPYM, which offers identical exposure for just 0.02%. The spread is massive. Yet, investors keep flowing into SPY. This is not about cost efficiency. It is about brand loyalty and liquidity preference. BlackRock has successfully monetized trust, allowing it to maintain this wide fee gap despite the availability of cheaper alternatives. For conservative investors seeking safety, BlackRock's MAXJ ETF offers a different proposition. It provides 100% downside protection for the S&P 500. However, this safety comes with a steep price. The fund caps upside gains at 10.6%. This structure is ideal for those who fear a crash but want to participate in a bull market. The risk lies in timing. If the market rallies sharply, MAXJ holders will miss out on the majority of the gains. It is a trade-off between security and opportunity. Looking ahead to today's release, the economic calendar remains quiet. There are no major high-impact data points scheduled for the next 36 hours. This absence of data means markets will remain sensitive to the structural shifts we just outlined. The tension between crypto governance, bond yields, and trade fragmentation will drive volatility. Investors must watch these macro trends closely. The silence in the data releases will be loud in the price action. That's your market briefing. Follow Rumour with AI for daily market intelligence.